Hey everybody, my name is Tyler and this is my 4th attempt on making this video. So it better be great and it better be get a lot of views and a lot of comments and a lot of likes and a lot of fucking subscribes. Because this is my 4th time trying to make this video, right? But as you guys know, I'm your favorite foreign exchange trader that makes everything simple, breaks it all down in little bitty pieces so you can understand. Okay, I'm an 18-year-old foreign exchange trader. I've been trading for about a year. And yeah, I have my own personal group, so if you are looking to join my group for any specific reason, I have prospect calls every single day hosted on the app Zoom. Download Zoom, click the link, and you're gonna see me talking at 8 p.m. Eastern on any weekday if you want to join. Just a heads up, it's $200 to join, so already had that in your brain when you click the link. But anyways, today's video is going to be about Forex, trading, and taxes, right? Because a lot of people try to challenge me on that subject of foreign exchange trading and taxes, and oh, is the IRS gonna come take me to jail if I do this and la la la. No, sweetie, baby, look it up. No, you're not gonna go to jail for this, okay? As long as you file your taxes, as long as you report your money, and as long as you pay up, you're not gonna go to jail, okay? So basically, what happens is, I'm not a tax professional. Let's get that out the way. I'm not a tax professional. I'm not somebody that's a tax professional. So all of this is like basically on research that, you know, from books or the internet. And I'll probably make another updated video next year after I actually file my taxes, because this will be my first time filing taxes for Forex, because, you know, last year when I started, I didn't actually make enough money to where I had to file, and I had a job, so I wasn't really worried about it. But this year I will be doing it, or 2020 I will be doing it. So I'll probably make an updated video of that entire process after it is finished, right? So this is a part 1, part 2 pending, right? Part 2 pending. So a lot of y'all that are watching this video might have jobs, right? A job, or probably everybody in it that's going to watch this video probably has had a W-2, right, from a job. So a W-2 form is what you get from a job, right? You know that when you make money, like when you are paid, your taxes are automatically taken out, and at the end of the year, you're going to see how much you made, how much they took out, your gross and your net and all of that stuff, how much you made, how much they took out, and then you get tax deductions if you got kids, if you in college, if you have federal loans and stuff like that. And a lot of people at the end of the year, they get that fat little check and they go and they ball out. I put the new Ford on the Jeep. They go, they ball out, all that type of stuff, and then they end up broke again. That's basically how it works. Everybody get them in February, March. By April, May, it's not very fun anymore, right? So that basically is how it goes for people with W-2s. People that work jobs or work for somebody else. Now, people that own their own businesses or are independent contractors of a company, and an independent contractor is somebody like that does DoorDash, Uber, or any somebody that's paid off of a commission. So it's not an actual set fixed amount, but it could go up or down depending on how much that person works for the company. That's like an independent contractor. So those people will get like a W-9 or a 1099 form, and all of the money that they make is not taxed at that specific time, just like trading is not taxed at that specific time when you make a withdrawal in the market, right? When you make a withdrawal, you don't pay any tax at that moment. Instead, when the year is over, you know, you want to add up all the money that you have made or lost in the market, and then you want to put that together to report it to the government, right? You want to put that together to report it to the government. So, right? So this is very important, because, you know, if you're just making a couple thousand, 1,000, 2,000, I mean, people, I know I'm gonna get this question like, do I have to report it? Do I have to do this? Do I have to do that? I mean, you do what you want to do. Most of the people that's watching this video are gonna be grown. I ain't saying don't, but you know, you're not trying to get locked up for tax evasion. You feel me? You're not trying to get locked up for that. So I would say anything over $10,000, you might want to report that to the IRS and pay whatever you gotta pay, so that you can keep living a free life and you don't gotta be like, I'm locked up, they won't let me out. None of that. We ain't trying to have none of that, right? But the good news is, if you are somebody that has a registered business with the government or with the state or whatever, like I have an LLC on Powerhouse Investments LLC. Don't mind my nails, you know, they're slowly all coming off. But if you have, you know, a registered business then you could get tax write-offs, right? You could get tax write-offs. So, you know, anything that you do pertaining to your business, if you go on a lunch date, if you put mileage on your car, gas in your car, like I did DoorDash for a time, and that's putting mileage on my car because I have to drive from place to place. So with that being said, that's a tax write-off right there, because my car depreciates with the more mileage that I put on my car. So that could be a tax write-off right there, the depreciation in my car because of me driving it. Any events that you throw, hosting a venue, any hotels that you have to stay in for a trip, any flights that you make for a business trip, all of that is tax deductible, and it will take down the amount of money that you actually have to pay at the end of the year if you make a lot of money trading, right? If you make a lot of money trading, those are all, you know, forms of tax deductions, and anything could be a tax deduction depending on how you word it. If you take a family vacation and you have a conversation with somebody, that could possibly be a tax deduction depending on how you finagle your way around that. And yeah, you know, if you go on a dinner date and y'all talking about business in the midst, that could be a tax deduction right there. So you have to do your own research to see, you know, how that actually works. Like I said, I'm not a tax professional, but this is just some information that I compiled with videos, internet research, and books. So yeah. Also with Forex. So from my understanding, there's like a 60-40 split. So 60% of the gains that you make in the market will be taxed as like long-term gains, and 40% of it will be short term. So from my understanding, like I said, the short term will be taxed higher and the long term will be taxed at a lower rate. So you get to save some money with doing it like that, I guess. You know, like I said, I'm not a professional. I'm just going by what I saw. And then, yeah, so that's like a benefit to being able to, you know, it's not like a regular business where I guess you have to report everything that you earn with the same amount of tax. With, you know, withdrawing money from the market, you get that 60-40 split like you was doing like futures or commodities or anything like that. Lastly, you want to be able to, if you are solely a trader, like you don't do anything on the side, and you kind of still weary, tittery, all that about reporting your taxes, you want to report your taxes, because if you are solely a trader, or you ever plan on being, like I'm not solely a trader. Trading is not my only income. Like I said, I'm an IBO member for a company called I Am Mastery Academy. So they pay me on a consistent basis every single week, right? But, you know, adulthood is a really scary place. I didn't know it was this much work. But if you're trying to get like an apartment or a car, or, you know, a car that you're financing, you're not actually buying out of pocket, or anything like that, and where you're going to be paying on a consistent monthly basis, you have to actually have proof of income, and it has to be consistent. I didn't know that. I didn't know that. I thought, you know, you want this amount of money, I give you this amount of money, and you just gonna trust me to pay that shit back. You know, if you want a loan, you got to do the same thing. I didn't know that. I just found that out recently. So it's important that if you are trading and that's going to be your only source of income, that you report all of your gains to the government, so that you will have a 1099 or a W-9 form, so that if your withdrawals are not consistent, like you don't say like, okay, every Friday I'm going to make a withdrawal, or every Monday I'm going to make a withdrawal. If those like are not consistent, you can't really use that as proof of income when you're trying to get a house or get an apartment or get a car or anything like that. And so a lot of places will deny you because this income is not, you know, substantial. It's not consistent enough for us to let you move into our apartment or wherever, because we don't know if you're going to be able to pay us our money back. So it's important for you to have a W-9, so that's the official, you know, government document saying, okay, last year I made $100,000 from this, whatever I'm doing. So I will be able to pay you your money back. You had an official document and you could just give it to them, and then yeah, you're good after that. But if you don't have those documents, they want like 6 months of bank statements, and they want this and they want that, and I'm like, damn, I got the money. Like, y'all can't even take the money. Like, I gotta give y'all more stuff, and I can't move in because I don't know. So if trading is like gonna be your main source of income, you want to make sure that you're reporting all of everything that you make to the government. And I'm assuming that if it's your main source of income, you're making. Additionally, during the last clip of the video, my phone ran out of space. So yeah, assuming that if you make this your only source of income, you're making a substantial amount of money to where, you know, you can prove whatever. I don't even know what thought process I was going through when I was saying that. But this video, the last video, was already 10 minutes. So I'm not going to talk anymore. Like I said, once I do more research, once I file my own taxes, I will do a part 2. If I said anything wrong during this video, or if anybody that watches this video is a tax professional and I said something wrong, please correct me, because I'm always open to new knowledge. Also, if you live in Philadelphia, I will be in Philadelphia on Saturday, so y'all can come fuck with the kid. With your boy. Y'all can come fuck with the kid on Saturday. I'm having an event from 1 to 3 p.m. on Saturday, so if you're interested in Forex and you from Philadelphia, make sure you hit me up. Put all my social medias on the side somewhere over here, and my phone number and my WhatsApp and all of that stuff. And everybody continue to be blessed and wait on my video tomorrow.